Hello and welcome back. We will continue with value-added tax. So let's move to our notes without wasting some time. As you can see on the screen, I've already shared the screen with you. We have done till page 66 in the previous lecture. This is page 67. Page number might be different on your notes, but the data will be exactly the same, so you do not have to worry about it. Even if you do not find this data into P6 lectures, then that is absolutely fine, because if you do not find it in the P6 lectures, then they are not relevant for P6. So that's why I did not put in there. However, this lecture is both relevant for F6 and P6. Let's continue with lecture then. It says deduction of input tax. Now, which input tax can we deduct? For input tax to be deducted, the person must be a registered person and he must hold the value-added tax invoices of the supplies made to him. So you must keep the invoices. For example, if it was fuel invoices or it was purchases invoices, whatever it was, you must keep the invoices. The distinction between capital and revenue assets does not apply for value-added tax, as the registered person can claim all input tax on supplies made to him in the course of his business. So in the course of business, whichever asset you have bought, even if it was a revenue expenditure or it was a capital expenditure, whichever it was, you can always claim the value-added tax on that. Now, the sum of the value-added tax is not recoverable. Now, what are that? What are them? Let's look at them. VAT on purchase of motor cars, not wholly for the business purposes. If you're using the car for business and private use, then you cannot recover it. Motor cars not wholly for business purposes is not deductible. If the car is for wholly business purposes, then you can recover it. However, the VAT incurred on repair and maintenance of the car is wholly deductible even if you are using it for private use. VAT incurred on fuel for business purposes is deductible. Now, say for example, if you are a restaurant and you are doing deliveries as well, and you are incurring some cost on the fuel, or if you are a taxi driver and you are incurring some cost on the fuel, and then that would be deductible. The VAT incurred on fuel for the business purpose is deductible as an input tax. But if the fuel is provided for the private use as well for the employee, then the business may claim the input tax. The business will claim the input tax, but must account for the output tax as well according to the scale given in the exam question. So examiner will tell you the scale in the question paper. So if the employee is using the car for private use, and then business can claim the input VAT, but you will have to consider the output VAT as well for that, for business. Then it says VAT incurred on business entertainment to UK customers are not deductible, and on non-business items as well. Then comes the pre-registration input VAT. Now, what is that? When you're going to start the business, now before starting the business, you might have incurred some expenses. Now, you haven't started the business, but you are starting to incur some businesses. Say, for example, this AccountancyTube studio. Before I started to deliver first lecture, there was some costs involved. You are just watching the finished product when you're watching this lecture, but you don't know the hard work and the money which was invested before making the studio and buying the stuff and all that, because you are watching it a ready-made product. So the costs which are involved in that before starting the business, there was some costs as well. Before even I came here, there were lots and lots of costs involved. Now, them are the expenditure which are called pre-registration expenditure. Now, if I have done some pre-registration expenditure and I've paid some VAT on that as well, that is called pre-registration input VAT. So I haven't started the business yet, I haven't registered for business yet, but I have incurred some expenses. Now, before starting the business and before even registering the business, if I have incurred some value-added tax, if I have paid some value-added tax, I can recover that value-added tax if the conditions are fulfilled. Now, what are the conditions? Normally, VAT incurred before registration cannot be accounted for as an input VAT. If the conditions below are satisfied, then it can be treated as input tax. Now, they are different for goods and services. Now, the goods must be acquired for business purposes and should not be sold or consumed prior to the registration, so it should be in the stock. Then it says the goods have not been acquired more than 4 years prior to the registration. So as far as goods are concerned, if I have bought some goods, they are in the stock and I haven't purchased for more than 4 years ago, then I can claim the value-added tax on them goods. Alright, then comes the services. The services must have been supplied for the business purposes and should not have been supplied for more than 6 months prior to the registration. So for services, it should not have been supplied for more than 6 months. Say for example, if I register AccountancyTube for value-added tax purposes now, and if I have paid some legal fee to register this business to my solicitor, and if it was not paid more than 6 months ago before I registered for value-added tax, then it will be recoverable as pre-registration input VAT. However, if I paid the fee to solicitor more than 6 months ago, then it won't be recoverable. Alright, so that was our pre-registration input VAT. Then comes the penalties. Now, default surcharge. What are the penalties? Let's look at the penalties now. A default surcharge says if a taxable person submits a late VAT return, if a late VAT return is submitted or submits a return on time but makes a late payment of the VAT return. Now you know the difference at this level. There is a difference between VAT return and VAT payment. VAT return is just a calculation, just a account where you have to fill the form and you have to tell the HMRC that how much you have to pay for value-added tax or whichever tax. However, tax payment is when you actually pay. So there is a difference between VAT return and VAT payment. So when you are late in VAT return, or you have submitted the return on time but you have paid the payment late, in this case the HMRC may issue a surcharge liability notice. Now the HMRC will issue a surcharge liability notice which would specify the surcharge period. So HMRC will say you have that much period, which will be surcharge liability period. Now in that surcharge liability period, if you incur another late payment or if you incur another penalty which lasts for 12 months, it says, if within that period the taxable person concerned makes another default, excuse me, a default surcharge is also levied, which is calculated as a percentage of the tax paid late. Learn this table as it is not supplied in the exam, because this table will not be given to you in the exam, so please make sure you learn it. Now, default involving late payment of VAT in case of in the surcharge period. Within the surcharge period, if it is first default, then it will be 2%, and if it is second default, it would be 5%, and it will be up to 15% if it is fourth or more default. Now, how will be the default calculated? Surcharge would be as a percentage of the VAT outstanding at the due date. So it will be percentage of the VAT outstanding at the due date. And what is the penalty for errors? You have already seen in the self-assessment, so please make sure you go back and see it under the section of self-assessment. I've already given the details in there. And interest on unpaid value-added tax. Interest is charged on the value-added tax paid after the due date. So when you have paid after the due date, then the interest you will have to pay interest on that. Alright, and for penalties of errors, please make sure you go back to a self-assessment chapter where you will be able to find the penalties and errors. So penalties on errors shall be same as for income tax errors, depending on the prompted and unprompted disclosure. So you will be able to find it in the self-assessment portion of your notes. Right? So that's it for this lecture. We have concluded our value-added tax as far as F6 is concerned. So that's it for now, and good luck to you, and I will see you in the next lecture. Thank you and goodbye.